and welcome to tradingfloor.com's weekly Asian focus. In this report with Andrew Robinson, market analyst for Saxo Capital Markets in Singapore, he takes the temperature of the Japanese economy. Welcome, Andrew.
Hi there.
There's a slew of Japanese data to be published at the end of this week, including PMI, unemployment, CPI, industrial production, household spending and retail trade. Of these reports, which one is likely to be the main focus for markets and why?
Well, it certainly is a bit of a shopping list at the end of the week. For my choice, first of all, I would choose the PMI data. It is the first of the global PMI numbers to be released for September. I think the big question on everyone's mind is how low can it go? Last month for August, we saw a slight dip to 47.7 from 47.9, but it has been in negative territory since May, so things are not looking good. I think generally the market is expecting a lower number. As I said, it's just a question of how low it will go. Second on the list, I would suggest the CPI numbers. We've been in negative territory for the past 2 months, and everyone's questioning whether the Bank of Japan's target of 1% inflation is actually a pipe dream or whether it is feasible. I think generally the market is looking for a slight deterioration from 0.4% month on month last month to 0.5%. So it's not looking particularly good, but generally I think those are the main two items that the markets will look at.
And otherwise, I mean, surprises in the data, you know, what are you expecting? Or
well, I think if there are any surprises, it will be to the upside. Generally, the markets are looking quite depressed. Economic activity is definitely slowing, so I think if we see any surprises to the upside in either the industrial production, the retail trade, then that will be seen as a positive. But any numbers that are worse than expected will certainly, I don't think, will create very many waves.
Looking at the Japanese yen, it has been strengthening versus both the US dollar and the euro for some time, thereby hurting Japanese exporters. With the dollar-yen cross particularly still drifting lower, what's the likelihood of further Bank of Japan intervention then?
Well, the last time we saw physical intervention by the Bank of Japan was back in November last year when dollar yen was in the low 75s. We're obviously quite away from there at the moment, but I think as we approach the recent lows that we saw just above the 77 figure level, I do think we will see a step up in the rhetoric that we're hearing from the Bank of Japan, because obviously words are a lot cheaper than actual cash. So I think we will see that first of all before we see any kind of physical intervention. As to trying to find a particular trigger that might force the intervention, that's very difficult. I think we'll have to have a look at other markets as well, how the stock market is doing, whether there is finally any reaction to the Bank of Japan's quantitative easing from the last meeting. Market is actually speculating that come October there are 2 meetings at the Bank of Japan and that we might see another round of easing towards the second half of the month. So that again might have a slight negative impact on the yen. So that would reduce the need for any kind of intervention. I think generally the markets are not going to get too worried until we certainly drift below the 77 mark and maybe waiting until we reach closer to the 76 level.
What about the continued dispute between China and Japan over some islands in the East Asia region? How are the Japanese companies with operations in China coping with the subsequent tensions there?
Well, yes, we've already heard news from a lot of the car makers. They're either halted production or they've certainly scaled back production in China. Interesting anecdote from Kyodo News. They said that in a recent international trade conference in China, 60 Japanese companies were asked to leave. So there is certainly an escalation on the face of it in these tensions. And you have to question who will actually come off worse from a protracted tensions and trade relations turning sour. I think on balance, my guess would be that the Japanese would suffer more. One of the problems we do have in Asia is this concept of face, that now the idea is being bandied around that is a question of how they can reach a favourable solution to both parties without either side losing face. Now that will be quite difficult, but I do get the feeling that diplomatic processes are being escalated to try and prevent something really getting out of hand. The last time this all sparked a row was back in 1970, when at the time the leaders in charge did actually reach a compromise where they said that they would put any decision off until a further date. Now, whether that further date is now, we don't know, but I think the whole idea was to promote Japan-China ties, and I think that's something that's very much on the agenda. So I do feel that we will see a diplomatic solution before the trade war really escalates into something disastrous.
Thanks for your insights into the Asian region and particularly Japan this week, Andrew.
You're welcome.
Take a look at tradingfloor.com for more of what Andrew's writing about the region in Asia.